So how the heck can I look at this and tell you it's time to buy the stock? I mean, have I lost my mind here? No, I think I've just done homework. First of all, you need to understand that Clorox has now reset expectations. I think the numbers are now low enough that they can be beaten. Maybe it's even classic UPOD, under promise and over deliver. We've seen this pattern before. Do you know in January, McCormick cut their forecast, stock got trounced, then turned out to be a fabulous buying opportunity? Since then, McCormick's raised its guidance twice. Stock has caught fire. Nobody even remembers that they disappointed 9 months ago. Apple did the same thing. Remember when they issued that putrid guidance right at the beginning of the year? Well, I mean, that stock's gone from 142 to 225, one of the best performers out there. I think Clorox has an opportunity to do the exact same thing here, but that's not all. See, we also got some good news from the analyst day that I think no one noticed because everyone was laser focused on the number cuts. For example, the company rolled out a new long-term strategy with new long-term forecasts. They're talking about 2 to 4% net sales growth, 25 to 50 basis points of operating margin expansion, and copious free cash flow generation. The issue here is that most analysts just don't believe Clorox can do it. They don't think it can hit the targets. They're really doubting. But I like the sound of the new plan. They want to invest heavily in their brands and innovation to differentiate their products from all that private label competition out there. That makes sense to me. If Clorox can actually deliver on these goals, the stock deserves to go much higher. That strategy makes a lot of sense to me, even if Clorox doesn't seem to be seeing a lot of benefit from it at the moment. More importantly, Doors seems to have a very good handle on what's been going wrong in the company's most troubled categories, like Glad bags. The problem? Clorox raised prices last year when everybody was worried about rising raw costs. Then raw costs came back down. Most of the competitors left the prices unchanged. In response, retailers have been punishing Clorox by giving them fewer points of distribution. That's the problem, and Doors says he's working with those retailers to get that distribution back. I think he's going to succeed at that. Oh, and the company also mentioned that they're rolling out a line of Burt's Bees personal care. I really, really like this. Where's my Burt's Bees stuff? Just a second. I, of course, don't have any Burt's Bees stuff. That's my bad. And that's going to be, the Burt's Bees will be, actually I have some in my bag. Not this kind, though. It's going to be infused with cannabidiol, or CBD. And I think it will be a big hit because it will be the first truly national trusted brand to offer cannabis-infused balms and salves. And that's huge. I mean, right now, Lord Jones is the big brand. Most people don't know Lord Jones, but who doesn't know Burt's Bees after all the money that Clorox put behind it? Finally, it's worth pointing out that Clorox has been through this before. In 2016, the stock got hammered based on worries that the environment was too promotional and the private label competition too fierce. The stock bottomed at 110 on November 10th of 2016. 5 months later, it's 138. We saw the same darn thing at the beginning of last year, too. The stock plunged to 113 in April of 2018. Everyone fretted Clorox was a broken stock. Boom, 167. Bottom line, when I see this kind of pullback in Clorox, I don't think sell. I think buy, although there might be more downside before it bottoms. But Ben Odor is an excellent CEO who's more than proven himself, which is why I'm willing to stick my neck out and recommend putting a small position of cannabidiol on my, putting some Clorox in your portfolio, and then I think, you know what, buy more if it pulls back, because look what's coming. Cannabis under Burt's Bees name. You tell me that won't be the bomb, B-A-L-M, B-O-M-B. And hey, you know what? They're paying you to wait with a 2.8% yield.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.